Hi, we're here today to talk about property investing and to talk about how to replace your income through capital gains on property in less than 10 years. So who am I? My name is Catherine Smith. I'm a wealth coach, have a number of degrees and diplomas, but more importantly, I'm a passionate property investor and have been for over 20 years. So, today, cash flow versus capital gain. Today we're going to talk about capital gains, but I do have another presentation where we do a similar exercise of replacing your income just through cash flow property. So let's look at how to make money from properties with capital gains. First of all, we need to know two important concepts, and that is compounding and gearing. Firstly, compounding. Albert Einstein said that compounding is man's greatest invention because it allows for a reliable, systemic accumulation of wealth. Then multiply this through the effect of gearing. Let's just say you have $30,000 and you invest that in the bank at say 5%. Don't even think you'd get that at the moment. You get $1,500 in capital gain or interest, and you'll actually lose half of that in tax. Let's say you took that same $30,000 and you invested it in a house at 5%. And that's a very, very, very low growth rate. It would be the historically lowest growth in Australia. So you've now made a $15,000 capital gain. You haven't realised the gain yet, so you're not taxed on it. And it's 100 times more than if you just put the money in the bank. That is the power of gearing, using other people's money to work for you. Now let's put gearing and compounding into perspective. Let's say you buy a fairly standard investment property at $350,000. The repayments on it are $435 a week. The rent is $350 a week. So you're making a shortfall of $12 a day. But what happens to property over time? It goes up in value, often at 10% per annum. So that's a capital growth of $35,000 a year. By spending that $12 a day, you're making a capital growth of $35,000, and that's before tax breaks, which we'll talk about in other seminars. So let's have a look. Let's say, how many properties do you think you would need to have to make up $1 million worth of property? Well, 3. In fact, really only about 2.5. So let's say you have $1 million portfolio, going up in value 10% a year. That's $100,000, but the next year it's actually more than that. That is the benefit of growth on growth, or compounding. So that property now goes up in value, and over a 10-year period, at the end of year 10, you've now made $1.593,000, or should I say $1.5 million in capital gain. The loan repayments are still the same because we've set the loans at interest only. So let's say in the beginning you're losing $260 a week, but in the end you're now making $790 a week positive cash flow and a capital gain very large every year. Let's look, have we replaced your income? So in the 10 years you're now generating $41,000 per annum in rental income, and you've got a capital growth every year of $240,000. That's an income of $281,000 per year. So have we replaced your income yet? I know it certainly replaces mine. That's only 10 properties. Only 10 years and only 2.5 properties. Imagine the potential of a longer time frame and more properties. So which method to use? Capital growth or cash flow? It depends. Get professional advice. So, thank you for listening to that, and if you'd like any further information, please consider my Silver Property Coaching membership, valued at $97 a month but free for a limited time. It's exclusive property coaching with myself, and it will set you on the path to financial freedom. So go to holisticpropertyinvesting.com landing page or email property@holisticpropertyinvesting.com.